Welcome back. We usually focus on catching those sharp weekly moves, but sometimes a setup comes along that is so big we have to zoom out. Today is one of those times. Eaton Corporation, ETN. This isn't just a trade. It's an index fund for the biggest trends of the decade: AI data centers, grid modernization, and aerospace. A massive, multi-year pattern points to 550 plus. We are using a professional tool for this long-term leverage: leaps. Quick disclaimer: I am not a financial advisor. This video is for entertainment and educational purposes only. I analyze the charts and data to find the edge, but you must control your own risk. Always do your own due diligence. Now, let's look at the setup. Let's look at the chart. The technicals perfectly confirm the fundamentals. On the weekly time frame, you see a massive cup and handle pattern forming over the last 18 months. This is classic institutional accumulation. The cup shows the drop from $400 and the slow recovery. The handle is a healthy pullback, shaking out weak hands before the next major leg up. We have a massive fundamental and technical tailwind. How do we play it? Leaps. Call options expiring in more than a year. Why? First, time. We have 18 plus months for the thesis to play out. Second, leverage. You control 100 shares for a fraction of the cost, amplifying gains if the stock runs. And third, defined risk. You can only lose the premium you pay. No margin calls. Here is the macro reality. The world has a power problem. AI chips are power hungry, and data centers need a complete infrastructure overhaul. Eaton is the solution. Their data center orders are already up a staggering 70% year over year. Simultaneously, the US is spending $1.1 trillion to upgrade its aging grid, and Eaton's backlog is up 20%. This demand is locked in for years. Don't forget the third pillar: aerospace. Global defense spending and commercial travel are rebounding. Eaton's aerospace orders are up 11%. They provide critical components for next-gen aircraft and defense platforms. This is a diversified, high-growth industrial powerhouse firing on all cylinders. Let's do the math on the target. The depth of the cup is from the high of 400s to the low of 245s. That's about $155 points. Add that depth to the breakout point around 350, 360, and you get a long-term technical target of $500 to $550. That is the potential reward for patience. Here is a trade example. We look for options expiring in January 2027 or later. We target a strike near the breakout, like the $360 strike, for a balance of cost and leverage. But understand the risk. Leaps are volatile. If ETN is below your strike at expiration, you lose 100% of your investment. This is for high conviction, long-term investors only. To recap, Eaton is a rare opportunity where a massive fundamental shift meets a perfect long-term technical pattern. We believe leaps are the best way to maximize the potential of this multi-year trend to 550 plus. If you like these deep dive analyses, smash that like button and subscribe to GreenCandle. I'll see you on the next trade.